Investing is not a rocket science. Anyone can do it, quite honestly, but there are some things you need to keep in mind and some rules to follow, of course. I will give you 7 keys to investing. So let's go. Hello everyone, welcome back to the Finance Kit. As always, my name is Dion and I'm here to push your financial mindset towards a better reality. In this video, I will go over 7 key things you need to keep in mind as an investor. And by the way, for those of you that are part of this community and you have subscribed already, welcome back and thank you very much. And if you haven't subscribed yet, I'm not sure what you're waiting for. Go ahead and hit that subscribe button right away. It is free and I will bring you personal finance tips and investing tips in the future. Smash that like button as well. Let's get straight to it. If you're searching for ways to get rich quick, well, not the right place most likely, because I am a firm believer that to be a successful investor, it takes time, discipline, and patience. The most successful investors out there did not make it in a short period of time. One of the keys to developing a successful career in investing is knowing the path to follow and making the most of each step along the way. So I will take you through the 7 keys to investing that I think will help you tremendously in the long run. First and foremost, you have to start investing as early as possible. Honestly, it's never too early to start investing for your retirement or other financial goals. Investing early develops positive habits and teaches important lessons about saving and spending. Those that invest early are less likely to be careless with money in the long run. Additionally, the sooner you begin, the greater your returns will be over time. With fractional share purchases on a lot of platforms like Robinhood, you can start with as low as $100. So don't wait too long. Another key component to successful investing is dollar cost average. No, you don't want to try and time the markets to buy low, sell high, unless you're a day trader or a swing trader. But if you're investing for the long haul, when you buy matters a lot. And if you buy in an asset regularly, over time, you will have a great average entry price. And here's an example for you. Let's say you bought 1 share of XYZ company at the prices of $100, $85, $105, $120, and $110. So you bought total of 5 shares. Your average cost per share is what? If you guessed $104, that is correct. As you can see, during those times, the price was above the $104 in 3 of your purchases. But because you were able to buy over time during the drops as well as during the highs, you averaged a great price. Simple, right? By the way, smash that like button and share the video. It does help a lot. And I can't give you the keys to investing without bringing up that you need to invest in what you understand. If I was to ask you to pick between Apple and United Microelectronics Corporation, which one would you choose? I hope you said Apple. That is what I mean. Make sure when you are investing to do so in companies and assets that you understand. Over the last decade, we have seen so many different investments being created, so to speak, over time. Some of them promising you high returns at low risk. But as you know, if something is too good to be true, well, most likely it is. So stick with investments that you understand. Don't believe in that complex gearing or financial engineering, no matter what the promise of returns is. unless you're investing money you're willing to lose. With all that said, one of the most important things that will build wealth for you is investing for the long run. Just like Warren Buffett said, if you're willing to hold something for 10 years, that means that it's something you understand and it's something that you're willing to buy into. One of the smartest articles on investing I've ever read was by a guy named Charles Ellis, The Loser's Game. Search for it and give it a read, by the way. It was written in the 1970s. He observed that for many folks, investing may be a loser's game. Give the other fellow as many opportunities as possible to make mistakes, and he will do so. That is for sure. The longer you're in the markets, the more mistakes you will make. Absolutely no doubt about it. But if you have a clear goal, let's say retirement, and you start investing in your 20s and 30s, you can afford to make some mistakes. Learn from those and follow your long-term goals. Over time, you will accumulate returns as long as you're focused on your goal and don't follow advice from strangers and wannabe investors out there. That is why you need to be aware of false friends who only pretend to get on your side, like certain unscrupulous investment professionals whose interests may conflict with yours. You also want to remember that as an investor, you're competing with large financial institutions that have more resources, including greater and faster access to information. So stock picks are all around us. Talk shows, YouTubers, every news outlet out there has the best stock that they can pick that will make you the most amount of money. Bear in mind, you're potentially your own worst enemy if you fall for those type of trading strategies. Counting on your personality, strategy, and particular circumstances, you'll be sabotaging your own success if you follow somebody else's advice. Be honest with yourself and identify and modify the factors preventing you from investing successfully or moving you far away from your goals, and adjust. Investing is easy. It doesn't require a lot of money to start with, but it can cost you a lot of money if you're not doing your own due diligence to manage your investments. That is why you should diversify. This is a key to successful investing. Diversification is the most important concept in the financial markets. Its purpose is to protect investors when markets are volatile. You need to diversify your portfolio. You can do so by using different investments, different industries, different asset classes. Because as cheesy as it sounds, don't put all your eggs into one basket, please. There is not a single company in the world that I would like to put all my money into and just set it and forget it. And I don't care if that is Amazon, Apple, or any other. You never know what might happen, like a pandemic, for an example, or a financial crisis. And if you don't have a diversified portfolio, your risk is a lot higher. Just like with dollar cost average, when you diversify your portfolio, you negate a lot of the risk. It is highly unlikely that all of your investments will not be profitable if well diversified, compared to holding one stock in one company and something goes wrong. Diversification is vital in every stock market investing strategy because you don't want to be invested in a single company only to see it fail. And yes, that is possible for every company out there. Diversification protects you from any severe losses. It is as simple as that. But also, do not over diversify, as this may just complicate your life for no real benefit. Drop a comment down below and let me know if you like to diversify and how you like to diversify your portfolio. And lastly, what has proven to be the best strategy and what works in the markets is time. You need time to accumulate wealth. The key to success in stock market investing is time in the markets. So it's critical that you invest for the long term and that you hold most of your investments. You can still be a day trader or a swing trader if you see a good opportunity, but you won't achieve that 6 to 8% long-term return if you sell your investments when the markets go down. In fact, you will probably miss the strongest recovery years by doing so. Take an investment course or read a book that deal with modern financial ideas. And by the way, I have a couple links down in the description that you might to check out. Watch the Finance Kid as well, subscribe to my channel. But the people that come up with theories like portfolio optimization, diversification, and market efficiency, they received their Nobel Prizes for a good reason. Investing may be a combination of science, financial fundamentals, and art, qualitative factors, but it is not a rocket science. There are simple rules, the key ideas you need to follow to be successful and build wealth. There are many texts like Stock for the Long Run by Jeremy Siegel that specify the high-level finance ideas in a way that's easy to understand. Once you recognize what works within the market, you will come up with simple rules that work for you. Follow those rules, follow those goals to your riches. So there you have it, all 6 keys to successful investing for beginners and experienced investors. Let me summarize them for you. Start investing as early as possible. Dollar cost average over time. Invest in what you understand and invest for the long run while you diversify your portfolio and stay away from false stock market profits. And lastly, the longer you stay in the markets, the more wealth you will build. If you follow those simple keys to investing, you will be in great shape over time. Don't panic. Time is on your side the longer you're in the markets. So stay positive and master your finances, and I've been saying in every video. And with all that said, thank you for watching. Make sure to destroy that like button down there. Subscribe if you haven't already. Not sure what you're waiting for, because I will continue to bring you valuable content you don't want to miss. Working around the clock for you and sharing my content as soon as physically possible. Thank you if you have already subscribed to my channel. Don't forget to like and share the video. I hope it was informative and provided some value to you. Down in the description, you will find some helpful links and some books that I would recommend. Thank you for pushing your financial mindset towards a better reality. Until next time, stay positive, master your finances, and take a good care of yourself and those around you.